as a Maile Padhe. Hello everyone, my name is John Sherpa. I'm an ICAN CA student currently studying the foundation level under the new syllabus, and I've realized that teaching is the best way for me to understand and remember what I've learned. So I've started this series as a Maile Padhe to share the things I've revised in my revision journey before the exams. So every day I'll be going over the topics I've revised on a daily basis uh, to not only reinforce what I've studied but to hopefully help you guys, the viewers of these videos, to prepare better for our board exams and assuming our exams will be starting on 14th of December. We are currently 55 days out. Hello everyone. Today I studied the chapter 9 and 13 of tax. Let's start with chapter 9, which is tax planning, tax mitigation, tax avoidance, and tax evasion. And I'll be going over what I've revised today. First, tax planning and tax mitigation. So, what tax planning is the strategic. According to the book, tax planning is the strategic decision to manage financial affairs in such a way that it minimizes the tax obligation of the individual or the organization. And tax mitigation is very similar to tax planning. In fact, it's a part of tax planning. So, in tax planning, taxpayers use a specific provision mentioned in the tax law itself in order to uh, obligation. So, for example, uh, Ramu. So, when Ramuji plans or takes a strategic decision to distribute his income in such a way that he invests in government recommended retirement fund or pension fund or insurance, so his tax obligations are minimized, then it is known as tax planning. But and when Ramuji actually contributes to pension funds or insurance recommended by the government that minimizes his tax obligation, then that is known as mitigation. So, tax planning is the decision, whereas tax mitigation is the actual action. So now let's move on to tax avoidance and so tax avoidance. Tax avoidance is the action which involves structuring your transactions in such a way that uh, it minimizes the tax liability of the individual or organization, but it's not exactly legal and it's also not illegal. It just doesn't break any laws, and tax avoidance often involves exploiting the loopholes in laws. So, for example, a real life example of tax avoidance is when Apple opened its subsidiary company in Ireland, uh, and these subsidiaries owned Apple's intellectual property. So all the branches or franchisees of Apple throughout the world had to pay royalties to these subsidiaries. So it made the profits of the other franchisees lower, and the uh, main franchise of Ireland, where taxes are low, they had higher profit, so ultimately Apple didn't have to pay much taxes. So tax avoidance is not illegal, but it's often considered unethical. Now, tax evasion. Tax evasion is straight up the most illegal way to uh, deliberately lower the tax obligation of an individual or an organization. It involves false reporting, deceiving the tax offices, and hiding transactions to lower the tax liabilities. So tax evasion is straight up illegal. So now, in summary, strategic decision uh, to manage financial affairs in such a way that uh, it lowers the overall tax obligation of an individual or an organization. And tax mitigation is the actual action, like investing in the CI to lower the tax obligation of an individual or an organization. The uh, is the process of exploiting loopholes in the tax laws to uh, lower the tax liability of an individual or an organization, and this is often considered unethical. And tax evasion is the illegal manner to uh, manage transactions to avoid tax obligations.